The Checkpoint is presented by GM Pharma, the first international multinational pharmaceutical company in Georgia. GM Pharma, to serve those who need it most.
Mr. van Hulle, greetings. It's a pleasure to have you here today at BMG.
I'm very pleased to be here. It's my first time in Georgia, and I must say I like it very much. The weather is very nice today. It wasn't the day before, but I learned a lot, and especially the foods, the people are very nice. Really a discovery for me.
Well, thank you, and we're very happy to have you during your first visit here at BMG. Mr. van Hulle, you are considered to be the father of Solvency II regulation among many different things. You know, you are a professor, you have a vast academic background, you have a background of working in the European Commission for many, many years. But before we jump into all of this and we discuss all the regulations and the background in detail, I want to ask you about the purpose of the visit, which, as I know, is that you attended the Georgian International Insurance Conference. So let's talk briefly about the conference. Could you summarize what were the main topics discussed on the conference?
Well, with pleasure. Actually, this conference had been planned a long time ago, but COVID intervened, and so we were all pleased that it could take place here in Georgia. And basically, the conference discussed insurance in general, particularly health insurance, which is the main insurance business line in Georgia. And then we spend a lot of time also discussing MTPL insurance, which is a mandatory motor insurance liability. When the drivers cause accidents, somebody has to pay and compensate. And Georgia apparently is one of the very few countries in the world. I think I know of one other, which is South Africa, which doesn't have mandatory MTPL. So we discussed that, or the advantages to move towards mandatory MTPL, because this is in line. I understand that the Parliament will adopt a bill in this area, and we're very pleased in Europe about that, because motor insurance concerns all the countries, because Georgian drivers will go to other countries. We come to Georgia with the car, so we want to be protected. And then the second day of the conference, we discussed Solvency II, the possible introduction in Georgia of a new solvency regime for the insurance industry.
Okay, let's discuss both of those topics, but let's begin with MTPL regulation, which we understand will be soon present here in Georgia. Could you elaborate a little bit on the functionality of it? You know, will it be beneficial for Georgia as a whole? And could you compare the Georgian version of the regulation to its European examples?
Yeah, there are very few insurances in Europe that are mandatory, and MTPL is one of them. In fact, the view that we have in Europe is that when you have a driver license, you can only implement it and execute it when you have insurance. That's very important for the citizens, because everybody wants to drive a motor car, but nobody wants to pay the premium for insurance. But when I cause an accident, I can kill people, I can create a lot of damages, and it's only fair that we create a system, a kind of a pooling system, that's the idea of insurance, whereby the people who cause these accidents are contributing through premiums to an insurance system, whereby then that money is used to compensate the victims of accidents if these accidents occur. It's a kind of solidarity, and in that sense, for the citizens in Georgia, this is a must. Not a must for tomorrow, but a must for today. You need to have that. You need to have that protection, so that you know when you drive, when as a pedestrian you walk in the street and that you get overrun by a car, that you will get that compensation. And of course, to move from a system that you have here, where it is entirely free, to a system that is mandatory, you cannot do that overnight. Because motor insurance, the calculation of the premium, and that's maybe something I need to explain, is
yes,
that
please.
in insurance, there is a link between a risk and a premium. So the higher the risk, the higher the premium. Now, how can we calculate the risk? We need data. And obviously, in Georgia, you don't have data, because you don't have mandatory insurance in this area. And that's why there will be a transitional regime that will set up a pooling system whereby we will learn, see the data, and after some time, you will then be able to start liberating the market on motor insurance. That is something which many countries in Central and Eastern Europe, in the Balkan region, have already done in the past. It is not easy to do it, and it will require a lot of leadership from the supervisory authority to make sure, in cooperation with the insurance industry, that things run well. But the transition is necessary, and in the end, you will join a system which exists all over the world with a green card that will allow you to travel freely all over Europe and all over the world indeed, and to make sure that everybody will receive you with pleasure because you are insured.
Is the mandatory introduction of the MTPL crucial for Georgia to transition from Solvency I to Solvency II in the future?
No, this is not interlinked, but if Georgia, and I understand you have this association agreement with the European Union, if Georgia wants to join the European Union, wants to go further in this relationship, it is absolutely necessary to have MTPL insurance, because otherwise it will not be possible for Georgian cars to drive into the European Union unless one shows at the border that there is a green card, that the driver actually has insurance. So that is linked to opening up Georgia to what is so important for the country. It's to be part of Europe. Sometimes people say that I'm from Europe. My response to that is, you Georgians are also part of Europe. We are all Europeans. But to be part of Europe, to be part of this international community, this is one of the steps that is absolutely needed.
What are some other steps?
The other step is the move from Solvency I to Solvency II. And that is an issue which, of course, it sounds very technical. But to explain it briefly, it basically means that insurance is absolutely essential for any country if it wants to develop its economy, because the insurers take away the risks from private individuals and from companies. Unless you have a system of insurance that works well, is well supervised, is well regulated, your economy will not develop. It is impossible. Solvency I, which is a regime that you apply now in Georgia, is a system that only looks at the insurance risk. Basically, an insurer will have to have a capital buffer that will protect the insurance company against unexpected risks in the future. And the future is unpredictable. And that's why this capital buffer is so necessary. Under Solvency I, you only look at the insurance risk. But we know, we've learned the hard way, that there are many other risks to which insurers are exposed. For instance, market risk, credit risk, operational risk. And Solvency II is a system which is fully risk-based. It says basically that this capital buffer that you need to hold as an insurer will have to cover all the risks, expected, non-expected risks. And that is very important, because it will mean that insurers will not offer products on the market for which they do not have the necessary capital. And in that sense, for Georgia, it's very important, because it will increase the protection, it will improve the protection of the policyholders, of the citizens, of the businesses in Georgia.
Based on your experience, how long could it take for us to transition from Solvency I and Solvency II, and what needs to be done both on side, from the public side, from the regulator, from the supervisor, and what needs to be done from the private insurance companies?
Well, it is, the question is very justified, because it requires an effort from both, right? From the insurance industry. It will require a lot of investment in data collection, in better risk management, in better governance of the business. It also requires an input from the state. And in that respect, Georgia is the beneficiary of a twinning project with Spain, which is developing the legislation that will introduce Solvency II into Georgia. And that is, of course, very important. The project is ongoing, and I understand from the supervisor here that people there are not only being informed and trained, and the conference was part of that, but they are all discussing in detail the legislation in order to make sure that it is applicable in Georgia. How long will it take? It will take several years. And as I said this morning at the conference, and that is also the way the supervisor seems to be heading, that is, you have to follow a step-by-step approach. Lots of consultations, tests in the market, so that you make sure that the system will ultimately work.
Let's talk about the Georgian insurance market. How could you rate its current state today? And in general, what are some of the metrics that you would use in evaluating any given market, in this case, Georgian market?
Well, of course, we look at collected premiums. We look at the penetration rate of insurance. And in all these aspects, of course, Georgia is still an emerging market. That is logical. You are in the company of many other countries in Europe, in the southern part, in the Balkan, and so that have similar, developed, still a developing insurance market. Now, what is typical for the Georgian market, and I was surprised to see that, is that your business line that is the most important is health insurance. And that sounds very strange. I don't know of any other country where, that is obviously its tradition, each country has its own way of development. There is one country in Europe, for instance, the Netherlands, where healthcare is only organized by the private sector, by private insurance. All the other countries in Europe have a system of social security and of private health insurance. You have that here, and it's very well developed. I think it's necessary to develop other business lines, because we live in a very risky environment. We need the insurance sector to take on more risks. I think about property insurance, casualty and property insurance, natural catastrophe, all these sort of things, life insurance. There's so many business lines, so many areas where the insurance industry can contribute to making this country a better place to live in.
But what should be done to develop this, highly professionalized sectors of insurance? Because as you said, yes, health insurance is the biggest one, and there are probably some reasons for that. But what could companies do to interest people to get insurance for all these different types of services?
You actually use the word professionalism. What you need two things. You need good regulation. That's the start. Because don't think that the insurance industry will do it automatically. Good regulation, good supervision, high quality supervision, professional supervision. If that is done, if insurers act professionally, which means that if a policyholder has damage which is covered by the policy, it's immediately paid out, so that people have the feeling my insurer is there to protect me, to help me. If that's the case, if people have that experience, they will ask for other products. And so the market will develop, and it's to a large extent in the hands of the insurance industry to take these opportunities, based again, very importantly, on solid regulation and solid supervision done in a professional manner.
As you just mentioned, and statistics tell us that penetration rate for insurance is not that high in Georgia. Would you attribute that to more cultural reasons, mentality reasons, for instance, or more socio-economic reasons?
I think there's all the three elements. There is a culture issue. I mean, you come out of an area where the state was protecting against everything, so people don't see the need to do that themselves. They expect the state to do that. It's cultural, also because people have a natural tendency not to think about their problems. And so you need to remind them, should you not have insurance for this or insurance for that? And of course, it's also socioeconomic, because the more developed a country is, the richer the population, the more they can spend on insurance.
Today in health insurance in particular, because it's the biggest one in Georgia, the government's involvement is pretty big as well. And compared to the involvement of the private sector within health insurance, the difference is huge. Based on your experience, is this a sustainable and healthy model to have for the years to come, or something has to change?
Well, here again, I would say each country has to try to do it as good as possible. What is important in this country, though, and it was underlined also at the conference yesterday, is that you need a holistic approach of health care. And this is so important, because going forward, people live longer. People will have more demands for health care. And we need to provide the right products. The role of the state is to make sure that the people who cannot afford private insurance are protected. And that is something which, again, depends from country to country and has to be decided at the political level. But what is important is to take a holistic approach, which means that everybody has the right, the possibility, the means to get protection against health risks which are manifold, as you know very well. And I think the insurance industry still has a major role to play in providing new products for things like Alzheimer and all these other diseases that will afflict the elderly population.
What are some of the best case examples of cooperation between the public sphere and the private sphere in insurance markets? And do you think that some sort of combined package of insurance, that some portion is provided by the government, but then another portion is provided by the private insurer, could work best?
Well, again, it's a matter of feeling. In most cases in Europe, I think the basic healthcare provision is done by the state. The problem is that the expenses involved, the cost of healthcare today is increasing tremendously. And therefore the countries, the governments, the budget can no longer cope with this increasing expenditure. And therefore the private health insurance is developing more and more in many countries in Europe to take care of the highest costs, the very specific costs. But asking me for a country that I could name as a good example is very difficult because each country is very different. And that is a particularity, by the way, of the European Union. Some people say everything is decided in Brussels. That is not the case. There are many areas where the member states have to take their own responsibility. And one of them is exactly in the area of social security, of healthcare, where different approaches can coexist.
Would you say that mandatory practices, for instance, MTPL or any other different sort of mandatory insurance, in the long term or even in the medium term can increase the penetration of insurance in general within the country? Or such an involvement from the government side is, on the contrary, does no good?
I like your question, because this is a question that has been raised in Europe many, many times. And people lobbied me when I was in charge of insurance regulation at the European Commission. They lobbied me to introduce new mandatory insurances. I resisted that because I think that it has to be a bottom-up thing. The people need to ask the insurance, and the insurance industry needs to respond to that. The government should not regulate everything. I think something needs to be left to the market. And there is one country in Europe, by the way, if you're interested in that, that has a lot of mandatory insurance, and that's France.
At the same time, I understand that in order to increase attractiveness of insurance, you need to give people, in this bottom-up environment, you need to give people the information. What are some of the best examples of, both state and private cooperation of giving information to people? How should the government and companies motivate people to get insured?
Again, a very good question, because insurance is very complex. Most people outside the insurance industry do not know how this is done. They think it's a kind of a gamble on the future or an investment, but basically the insurance industry should become much more transparent. And this is part of Solvency II. Under Solvency II, one of the elements of Solvency II was to create more transparency in the insurance sector, because contrary to the banking sector, which already for many years was very much more focused on public disclosure, the insurance sector always remained a little bit in the corner. And under Solvency II, each insurance company will be required to publish a report, a solvency and financial condition report, in which it describes, first of all, what are they doing? How are they organized? What's their capital? How is their situation? What are the risks they're dealing with? And that will help to demystify this insurance process, which will always remain complex because people quickly leave you when they hear about technicalities. But it is very simple. Insurance is all about risk and premium.
Before we switch to talk about the pandemic, which I'm very interested in, I want to ask you about the role of the Insurance State Supervision Service here in Georgia. And before we go into the side of discussing actual work, I want to ask you about the general approach. Such a regulator, what should be their approach in general? Should they act as a watchman or that overlooks the process, or should the organization act as a more hands-on regulator? I
think the answer is very clear. You need to have an engaged supervisor or regulator, whatever you want to call it, it's very important that the insurance industry knows that their problems are professionally dealt with by a supervisor. And it's important for the supervisor that it knows the community that it is supervising. And in the old days, we had this hands-off approach, whereby you had inspections sometimes or sometimes not. You had to deliver papers. But for instance, on the Solvency II, we organize a dialogue. There must be a dialogue between the insurer and the supervisor. And a dialogue is not a combination of two monologues. It's really a conversation between the two sides of the bargain, and that is actually what the supervisory authority should be. Now, you asked me about the authority here in Georgia. What I like about it, I met them today and yesterday. Many young people eager to learn, hands-on, professional. That's very important, and that is a guarantee for Georgia that you will move in the right direction. Also, the fact that your authority is now present on the international scene, because you are part, I said already, you're part of Europe, but you have to show that. You need to have contacts with the European Supervisory Authority, EIOPA, based in Frankfurt. You need to have contact with the International Association of Insurance Supervisors. And Georgia is appearing there. And that's very important, because if it continues to play that role, it can be an example for some other countries in the region, in the same way as this has happened with countries like Slovenia in the southern part of Europe. So I think it's very important, and in the interest of Georgia, that you have a supervisor that is open-minded, that is proactive, and that is engaged in its supervision of the sector.
All right, let's turn to discuss pandemic, which technically is not over yet, even though we, on the daily basis, we don't feel like we felt 2 years ago, for instance. Let me ask you a very broad question. How did the pandemic change the global insurance market?
It did not change it.
Wow.
Yes, that was the problem. The problem with the pandemic was that we had in the past SARS and some other diseases which were taking place far away from here. But the insurance industry had already reacted on that by including in most insurance policies an exclusion clause for pandemics. And that's something that I also experienced as a policyholder, but I never thought about that. And then suddenly you have this pandemic. And so I had to cancel trips, travels, hotels, could do a lot of things. I went to my insurance company, I said, well, I want to get reimbursement. Oh no, you're not covered. The pandemic is an exclusion clause. So basically, the impact on the insurance industry has not been as big as it was feared. We had a lot of problems in the area of business interruption, because it's an insurance that is not so prevalent in continental Europe, but very much in the UK and in the US, in Australia. And there were problems because it was argued by the insurers that the business interruption they had to close down, that this was not covered by the insurance policies. And then some people tried to say, well, we have to change the contracts afterwards, which of course you cannot do in insurance. So basically business interruption has not been covered in most cases in the world. Sometimes voluntarily insurers agreed to pay out hotels, restaurants, although they were not obliged to do that. But in general, I must say, I personally feel that the industry showed too little empathy for the policyholders that were very often left in the cold. And that's had a number of consequences. First of all, supervisory authorities in a number of countries intervened to remind the insurance industry that in the end they have to work in the interest of the policyholders and not only in their own interest. And that has helped. And I think the industry has quite understood this message. I think if something like that will happen again, we will have a different approach than the one that we had now, where often we started to fight with the insurance industry. Is it covered? Is it not covered? We had to consult the lawyers, and lawyers, two lawyers have three views, so you always end up in a difficult state. But basically, the impact has been, it was feared that the impact would be huge, and obviously the insurance industry would not be in a position to cover closures of the whole economy that goes beyond the means of the industry. But what we need for the future is a system whereby the public and the private sector cooperate so that the damage that people suffer from lockdown, if we ever will have a lockdown again, I'm not sure, if that ever happens again, that people do get compensation for the damage resulting from that.
Well, thank you very much, Mr. van Hulle. It's been a pleasure talking to you. I think we covered many important and interesting points. Thank you very much for the interview once again, and we hope to cooperate with you in the future as well.
It was my pleasure, and I'm very happy that I could give my first interview in Georgia on my first stay in Georgia. Thank you.
The Checkpoint is presented by GM Pharma, the first international multinational pharmaceutical company in Georgia. GM Pharma, to serve those who need it most.